You're just a passenger in an Uber. You didn't cause the crash. You didn't even touch the steering wheel. So why is your own insurance about to go up 40, 60, even 80%? And why is Uber's insurance calling your spinal injury minor? You go to the ER, the x-rays look normal, they send you home. But days later, your neck stiffens. Your lower back starts shooting pain down your leg. Your arm goes numb while you're working. Now sleep is hard. Sitting hurts. Driving feels impossible. And just when you think things can't get worse, your own insurance company hints your premiums could spike because you had to use your MedPay or collision coverage. This is the double punishment most Uber passengers never see coming. Here's what many people don't understand. Spinal injuries from rideshare crashes are often invisible at first. We're talking about whiplash-related ligament tears, bulging or herniated disc, facet joint irritation, nerve root compression, what doctors call radiculopathy. These don't always show dramatically on initial imaging, but they cause real chronic pain, reduced mobility, months of therapy, sometimes permanent limitations. Insurance adjusters label it soft tissue, as if that makes it small. But to you, it changes your daily life. Here's the sequence we see again and again. Step 1, Uber's insurer delays, disputes liability, or makes a lowball offer. Step 2, medical bills start piling up. Step 3, you're forced to use your own auto insurance, maybe MedPay, maybe PIP, maybe even your health insurance. And that's when the second hit comes. Your insurer classifies it as an accident claim, even if you weren't at fault. Premium increase, 40% is common. In more serious cases, 60 to 80% or higher. And that increase can last 3 to 5 years. You didn't cause the crash, but now you're paying for it twice. Rideshare companies like Uber carry commercial insurance policies, often $1 million or more in coverage when a passenger is involved. But insurers know something. If they delay long enough, if they minimize the spinal injury, if they pressure you early, there's a good chance you'll tap your own coverage just to survive financially. And once your policy gets involved, your rates are exposed. The key is isolating the claim entirely to Uber's commercial policy layers. That means building strong medical documentation, proving causation even if symptoms appear days later, calculating long-term therapy and care costs, negotiating medical liens, applying pressure early before you're forced to use personal coverage. When done correctly, your personal auto insurance never gets touched. Your rates stay protected, and your settlement reflects the real value of a spinal injury. If you handle it alone, here's what typically happens. Settlements 30-70% below true value, premium increases for years, claims permanently closed after accepting too early, medical liens eating away at your recovery. Once you sign, there's no undo button. If you're wondering whether you even have a case, start simple. Ask, was someone else negligent? Are you still experiencing pain? Do you have medical documentation? Are you within California's 2-year deadline? If the answer is yes to most of those, your claim may be stronger than you think. The real danger after an Uber crash isn't just the impact, it's an invisible spinal injury, the lowball offer, and the premium hike that follows. Don't let one accident cost you twice. If you were injured as an Uber passenger and you're dealing with ongoing neck or back pain, don't touch your personal insurance until you understand your options. Get a free, confidential case evaluation. Protect your health, protect your settlement, and protect your insurance rates, because your future is worth more than a quick, low settlement and an 80% premium increase. Have a question about your rideshare accident? Drop it in the comments.